Let's bring in Overstock CEO Jonathan Johnson. I know you are busy today because you guys are preparing for Black Friday, but tell me how things are going, what's happening on your floors, and explain the picture at the moment.
Liz, it's always busy right before Black Friday and the Cyber 5. The good news for Overstock is we have more inventory this year than last year. We've been working with our thousands of suppliers to make sure that they're able to get product through the port. And just about everything that's for sale on our site is in a warehouse and ready to ship. So customers don't have any worries today about getting products from Overstock there by the holidays.
Wait, how did you do what the Gap and Nordstrom and a bunch of these other retailers cannot seem to pull off? You are saying you have more inventory ready to go than last year?
We do, and I think it's because we have such a large distributed supplier network. If one supplier is out of a crucial, black leather sofa, another one has a very like product in place. So while our inventory is not yet at pre-pandemic levels, it is better than last year. And if it's listed on the site, it's ready to ship when you buy it.
Okay. A lot of retailers, though, are getting punished not just for the fact that they cannot manage their supply chain, but also that they don't feel they're in the position to raise prices. So any time that during an earnings report, a retailer says, we're not going to raise prices, investors go crazy and they turn tail and they leave because they want to know that prices can rise and that people will still come by. Where do you stand at Overstock where you are selling first-run goods but at really solid prices?
So Liz, over the past several quarters, our average order volume dollars has gone up on each order, largely because of a mix shift. As we lean more into the home furnishing and furniture space, the average order size is bigger. Like everybody, we do feel pressure from input, from suppliers. There is inflation. Thus far, we've been able to balance that. We take some of it. Our suppliers have taken some of that increased cost, and we pass as little as possible onto our customers. Part of the average order going up is inflation, but most of it is a mix shift into a different category, home and home furnishings.
Jonathan, I want to know about your wages. The Federal Reserve just came out with its minutes from the most recent meeting and said that they don't really see a wage price spiral, but we know for a fact that wages are spiking. They're not exactly spiking as high as and as quickly as inflation is jumping, but we know inflation's moving higher too. Have you seen that happen at your company? Are you raising wages to attract more workers?
So we're always looking at all levels of compensation. Sometimes it's wages, sometimes it's benefits, sometimes it's equity. This is a great talent war right now, and we're being aggressive to play in that space, keep our best people, and attract and retain the best people all around.
I wanted to ask you also about share buybacks. You just recently announced a $100 million share buyback. Now, that tends to be very popular with investors. However, we do have this plan that the Democrats have put forth to pay for Build Back Better, and that is that they want to impose a 1% tax on companies that do their share buybacks. How would that, if it went through, affect your repurchase plan? Would you do less of it?
Liz, we'd have to factor it in. It would certainly factor at what prices we would buy because it would increase the cost to us as a company of a repurchase. Personally, I'm not a fan of any new taxes, and I'm not a fan of a tax on buybacks. I think buybacks are a good way to increase the enterprise value of companies, which affects all shareholders, including folks who hold in their IRAs and pension funds and elsewhere. So not a big fan of what's being proposed.
I didn't expect you to be, but I was certainly interested in asking. So you would definitely look at that and say, wait, if that did get imposed, we'd have to rethink our share repurchase plan.
Well, it's a factor into the cost. I don't think we would stop the plan. The plan's in effect for a couple of years, and we can exercise it as we choose, but it would be a factor in at what prices we would purchase because, in effect, it increases the cost of the company of any repurchase.
Jonathan Johnson, thank you for taking time out ahead of Black Friday. We know how crazy it's going to be. Let us know how it goes.
Will do. Have a great Thanksgiving, Liz.
Thank you. You too.